Hello and welcome back to Chairman's Briefing. This edition is brought to you by Kingfisher Metals. I'm Rachel Lee. Let's get into it. Gold markets are showing significant pressure following Trump's electoral victory, with the precious metal breaking below the key $2,600 mark in early morning trading. The SPDR Gold Shares Fund, which is the world's largest gold-backed ETF, recorded its biggest weekly outflow in nearly 2 years, shedding over $1 billion in assets. While some analysts are questioning if this signals the end of the gold bull market, Bar Chart's senior analyst Darren Newsom sees several catalysts that could reverse its fortune. Near-term technical indicators suggest that the metal may be oversold, potentially setting up for a rebound. However, the more compelling story here lies in the longer-term outlook. Newsom argues that the current Trump trade enthusiasm driving stocks higher and gold lower may prove short-lived. He points to several potential market-moving events ahead. First, expected policy shifts like OPEC likely ending production cuts, the possible lifting of Russian sanctions, and Trump's preference for a weak dollar and low rates. Second, geopolitical risks. Quote, "It would not be surprising to see China make a move towards taking Taiwan over the coming months. This could collapse the Nasdaq, which would then be expected to pull down the S&P 500. While Newsom focuses on geopolitical catalysts, senior commodity strategist at Bloomberg Intelligence, Mike McGlone, provides a different perspective based on market technicals. Gold, which has fallen from its recent peak of $2,700, faces several near-term challenges. First on the radar is the potential cooling of global tensions, particularly if China shifts away from Russia and moves closer to Western trade partners. Why does this matter? Well, because gold often thrives on uncertainty. When geopolitical tensions ease, investors typically move away from safe haven assets. Adding to the pressure are current market forces, like high U.S. interest rates, making bonds more appealing than non-yielding gold, while a muscular U.S. dollar makes gold more expensive for international buyers. With the S&P hitting record highs, many investors are choosing stocks over traditional safe havens. However, McGlone sees a potential game changer ahead. While gold and stocks have been moving in lockstep since 2015, a historical shift in Treasury yields could break this pattern. The yield curve is in its deepest inversion since 1977 and is now normalizing, a transition that has historically favored gold over stocks. Despite the recent pullback, McGlone argues that gold remains undervalued compared to equity markets. The evidence is that gold has outshined the broader commodity market, surging 35%, while the Bloomberg Commodity Index stays flat year over year. This remarkable divergence, combined with gold's history of thriving during market transitions, suggests equities may soon face increased pressure to justify their valuations as we approach 2025. Bitcoin reached a new milestone this week, surging to an all-time high of 93,500 following steady inflation data. The Consumer Price Index rose 2.6% year over year, matching expectations and keeping the Fed's anticipated plans for rate cuts largely on track. Market experts are pointing to multiple drivers behind Bitcoin's strength. Two Prime CEO Alexander Bloom highlights relentless demand from Bitcoin ETFs, pro-Trump policy expectations, and reports of Middle Eastern countries accumulating the asset. However, he cautions that current futures premiums suggest unsustainable leverage in the market. Looking ahead, analysts are mapping out ambitious targets. Statistician Willie Wu sees 102,000 as the next key level. In a post on X, when BTC breaks into all-time highs, there's no prior history of resistances for the market to trade around. This means price goes into unfettered price discovery. Expect wild swings. Meanwhile, TradingView analyst Trading Shot drew parallels to previous bull cycles, suggesting potential highs above 170,000. Now, their optimism stems from Bitcoin's current rally outpacing historical patterns, having reached new highs faster than in previous cycles. South32 is making a major move into copper exploration, investing $29.16 million in junior miner American Eagle Gold. The deal values American Eagle's shares at 87.5 cents each, which is a 15% premium to recent trading prices, signaling strong confidence in the company's copper-gold project. This strategic investment will give South32 a 19.9% ownership stake in American Eagle, making it the company's second major mining partner alongside Teck Resources. Now, the deal comes with no strings attached, no warrants, no commission fees, and a simple one-year lockup period, preventing South32 from selling its shares. For American Eagle, this cash injection is transformative. The company will now hold approximately $37 million in the till, providing ample funding for aggressive exploration at its NAC project through 2025 and 2026. CEO Anthony Moreau emphasizes the second major endorsement, which underscores NAC's potential as a large-scale copper-gold discovery with favorable development characteristics. Kingfisher has identified 6 new porphyry copper-gold targets at its Highway 37 project in British Columbia's Golden Triangle, following its summer IP geophysical program. The project covers 630 square kilometers, with key findings centered on the Williams deposit, where geophysical work has revealed a significant 2.2 by 1.5 kilometer chargeability anomaly that remains open-ended.
We had a different interpretation when we drilled it, but after this data, it looks quite different. And then ME is another very sexy target, huge copper, gold, silver, moly, lead, zinc soil anomaly. That hadn't properly been drill tested, no IP coverage. We ran IP across it, and it lit up like a Christmas tree. So basically, everywhere we did an IP survey, we had chargeability, and then in the guts of some of these systems, we had the highest chargeability I've ever seen in my career.
Now, the mineralization at Highway 37 is associated with the same intrusions found at KSM, Treaty Creek, and Bruce Jack. However, the company notes that the project area has a lower exploration maturity compared to these established deposits, indicating discovery potential. Aldebaran Resources has struck a strategic deal with Rio Tinto's technology venture, Nuton, potentially worth $250 million. The agreement centers on Aldebaran's Alter copper project in Argentina, where Nuton can earn a 20% stake through a series of staged investments. This deal structure is particularly attractive for Aldebaran's shareholders. It starts with an immediate $10 million payment and doesn't dilute existing shareholders. The remaining payments are tied to project milestones: $20 million following a resource update later this year, $30 million after an economic assessment in 2025, and a substantial $190 million payment in 2026 if all studies prove successful. What makes this partnership unique is Nuton's innovative copper extraction technology. Their sulfide leaching process could significantly improve Alter's economics, potentially transforming how the project recovers copper. Importantly, Aldebaran maintains control as the project operator while gaining access to Rio Tinto's technology. In a stunning reversal that's sending shockwaves throughout the mining sector, i-80 Gold has abandoned its Ruby Hill joint venture and revealed troubling concerns about its financial future. The company, which just months ago painted a bright picture of becoming a mid-tier Nevada producer, now faces serious questions about its survival. The drama began in November 2023 when i-80 Gold announced promising plans to partner up with a third party on its Ruby Hill project, aiming to fast-track development and transform its processing facilities. But in a bombshell announcement this Tuesday, management pulled a complete U-turn, citing gold's rising price environment and limited understanding of the project's base metal potential as reasons for walking away from the deal. But the real shock came deeper in the release, a stark warning about the company's ability to continue operations. With mounting losses, a working capital deficit, and uncertainty around future financing, i-80 Gold has essentially hoisted a financial distress signal. This dramatic shift from expansion plans to survival mode has left shareholders scrambling to reassess their positions. Australian gold miner Resolute Mining faces a $160 million tax demand, while its CEO and 2 executives remain detained in the capital city of Bamako. The detention of CEO Terry Holohan, which has sent the company's shares plunging 35%, marks an aggressive escalation in Mali's push to extract more value from foreign mining companies. This isn't an isolated incident. In fact, we've reported on this before. Mali's military government, which seized power in 2020, is systematically pressuring gold miners to renegotiate their agreements. Major players like Barrick Gold, Allied Gold, and B2 Gold have already faced similar pressure, with some agreeing to pay hundreds of millions to maintain their operations. The stakes are particularly high for Mali, Africa's third largest gold producer, which is increasingly aligned with Russia's Wagner Group while pushing out Western forces. Now, for Resolute Mining, which calls the tax claims unsubstantiated, negotiations continue toward a potential compromise that could see the payment split into 2 installments. Next, Rio Tinto is calling on Trump's incoming administration to fast-track copper mining permits, particularly for its stalled Resolution project in Arizona. The mining giant argues that the project is crucial for America's energy transition, potentially providing a quarter of U.S. copper needs. However, the project faces significant opposition from the San Carlos Apache tribe, who considers the proposed mining site sacred ground. The development would create a massive crater at their traditional worship site, leading to ongoing legal battles that have frozen the project's progress. Meanwhile, Rio Tinto is shifting focus to its lithium ambitions, particularly in Argentina. Following its recent $6.7 billion lithium acquisition, the company plans to prove its value creation in lithium before considering any major mergers. The mining giant also notes strong demand for high-grade iron ore from China, driven by the energy transition sector, offsetting declining residential construction needs. A major gold project in British Columbia faces potential legal action as the Hutchell First Nation threatens to sue both the provincial government and Osisko Development. At the heart of the dispute is the Caribou Gold Project, which aims to produce over 160,000 ounces of gold annually starting next year. Now, the Hutchell's concerns stem from bitter experience. Their territory was ground zero for the devastating Mount Polley mine disaster in 2014. They argue that the project threatens community health, cultural sites, and traditional practices. Osisko's CEO, Sean Roosen, maintains that the company has made good faith efforts to reach an agreement, including benefit packages similar to those accepted by other Indigenous communities. Now, the project requires a $588 million Canadian dollar investment and has already received environmental certification. It awaits final permits expected this December. And that's a wrap. If you've made it this far, hit the subscribe button for us and maybe a thought or two in the comments section on what you thought of this segment. Thanks for being a part of Chairman's every week. I'll see you next time.